Ladies.
Thank you, Andy, thank you, James. Welcome. So today's a Friday. I keep it short but informative. Okay. So my friend and a really good partner, Dandy, she's a lawyer, very experienced. So today we're gonna talk about first on the mortgage side, condo closing, pre-construction, assignments, and also our new policies regarding how can we be able to help client closing, pre-construction, condos, detached house or townhouses use market value. It means that if your original owner to sign the contract for pre-construction on the closing date, not only we give you 80% of the loan to value is your mortgage, however, we're gonna give you additional equity taking out from the appreciated value. So that means you get 20% down payment back on the same day of the closing date. Okay, and also more importantly, I'm going to introduce our new to Canada for new immigration deals. Okay, so I'm going to start it. And before we start, I never come empty-handed. So I'm going to hand out my let us take away.
Thank you so much.
Yeah, and
We'll pass it on.
okay, thank you. So this is not only my business card, but a cup of coffee on me. Okay, from Tim Hortons.
Oh, sweet.
Can you?
Nice.
Yeah, can you pass it?
Wow.
See, everyone's happy, right? So let's start. Okay, so my name is Angie again. So hope everyone remember my name. And I'm from Bank of Montreal as a mortgage specialist. I've been working in lending for more than 14 years. TD for 7, CIBC 3, and BMO is my 5th year. I love my job. As a realtor, I know that your job is to help your client to find a dream house and get an offer at a reasonable price.
I need to know how you did
My
it.
job,
Oh my God.
thank you. It's
That's
a good
very
idea.
unique.
Yes,
Yeah.
We all want to know how.
No,
Yeah.
we just care what
That's true too. We want to know how you
Yes.
yes, it
You
is
should give it
important.
last.
So is this like an application? There's like an app or?
This is the gift card plus my business card, and it is redeemable, so it means that you can really deposit if you can get a cup
They
of
can
Oh,
coffee.
you can
do it for
refill.
life.
You can refill.
Yeah, forever.
Keep using
Or
it.
keep in your car.
But how did you do this
That's
card?
good.
Hold on,
where did you get the card? After
You have to
presentation.
stay to the end.
Secret.
Good one.
The
You have
best,
to-
the
you have
best
to
for
stay
the
to
one.
the
Yeah,
end.
there's no money in
Who
it yet.
needs to
It's
explain
not
and then
activated
she
yet.
will tell you.
Yeah, so
I need more to hand out. I'm just kidding.
of course. So at the end, I will share my secret. It's a good idea. So
That's a very good idea.
Yeah, pass to your client, and you can just deposit whatever amount you want to. So this is
Yeah.
maybe 2 to
It's a
3
good
cups of
idea,
coffee
I like
from
it.
me.
Nice.
So get
Thank
used
you.
to for the next week in the morning. Don't throw away. Remember deposit, use your credit card deposit, and then keep in your card. Okay?
Think of
Okay, no
it.
problem.
I like that idea.
Okay.
Very good idea.
Right?
Yeah.
Smart idea. See, I'm not useless.
Yeah, of course.
Definitely not.
Okay, so let's go back. Yeah, BMO is in my 5th year. I really love my job. So as a realtor, yes, so you work very hard to drive around and find your client dream house, and finally get a reasonable offer, and you're hoping to close on time. My job as a banker, I have to make sure that your deal smoothly close. There's no surprises because you already spent the time, money, and invest everything to get a deal done. So I will make sure your client referrals will close and on time. Okay, so don't panic. Whenever I take your deal, it will close. But before we talking about individual cases and deals, really, I want to give you some information. I don't want you to train everybody as a professional as me. However, it's always good to know what's the program, what we can do, what is we have to looking for before we taking the client. Are they qualified? How much they qualified? What's the interest rate they want to have, and what is the challenge that your client has? So it will save our both time. Okay, so let's start. Before we talk about the policies and special programs, I want to talk about what is a mortgage. Whenever we come to bank or your client asks you, I'm gonna buy this house, or I have a $200,000 down payment, can I qualify to purchase a $1 million house, or do I have to downsize to a condo if I don't have enough income? So come to the banker always asks you, what is your budget? How much you want to apply for the mortgage? The mortgage, in terms of, we have different terms of, how can I say, products from the bank. Mortgage is conventional mortgage. Line for credit, home equity line, that's different banks have different names, but in general, it's home equity line for credit. What's the difference? Every client comes to me, asks me, hey Angie, I want to apply 800,000 mortgage, and I really want to take out from my existing house and use as a down payment for my next purchase. So that is a very good example. Maybe mortgage maybe is not the best option for them. Mortgage, as the first slide is right here. So loan to value is up to 80% if you not go as insured mortgage. And yes, we are taking your house as collateral. Whenever you pay down to the principal, our registration under your house, it will reduce. Example, first day we have an 800,000 mortgage registered on title. After 5 years, this client generously pay down the mortgage to 700, 500, maybe 400,000. And our registration on the credit report will reduce automatically. Okay? What is the line for credit? Home equity line for credit, same thing. We're taking your house as a collateral. Even though at the day you pay off the line for credit loan amount, on the credit bureau, it still shows 800,000 under your name. Now you're asking me, why should I do that? I already paid down. Example, I already paid down to 500, or I already paid down to $0. You should get my property back. Yes, you can. However, the beauty of a line for credit, more importantly, even though you don't have to borrow money from the bank, you don't have to pay the interest. Whenever you need to access the money on your credit bureau as a credit limit, you can use anytime. That's the beauty of a line for credit. Don't worry about, hey, under my credit bureau, there's an 800,000 surcharge. So, but I don't own any money. Yes, you are not owning yet. Thinking about this as a large credit card. We all have a credit card. We may not all have a line for credit. We all have a credit card. You have a $10,000 credit card. Whenever you use it, you pay for the interest. Whenever you pay, you need to use it. Still had a $10,000 credit limit under the card for you to access any time. Okay, so that's why the bank have to keep the 800,000 the line for credit limit under a credit bureau, because we're still taking your property as a collateral. Because of we give you the 800,000 forever, as long as you have the property. And now, some other question may ask me, what's the difference? You're talking about all the good things about line for credit. What's the difference? Am I paying more or higher interest from the line for credit? No. Line for credit, we have two options. One, so we call it the installments. Installments means that if you know that you are using the money for long term, 25 years, 30 years, or whatever, 10 years, we use that as installment and we fix it at mortgage term as mortgage interest rate. 1 year, 2 years, 3 years fixed, 5 years and variables. Whatever you want, we can do it. Whatever portion you paid monthly payment into the principal, it will automatically revolving to the line for credit account as your revolving portion. So whenever you need to withdraw money for short term, it will open, there's no penalties. Of course, the interest is higher, it's prime plus 0.5%. But remember, you don't have to pay for the penalty. No penalties, no commitment. Whenever you pay back, we prorate it. So use it 2 days, 3 days, 1 week, 1 month, 1 year, it is okay. It's open. Whenever you pay back, you stop paying for the interest. And how do we use it? Or which one is better for you or for your client? It's, individual case is different, so we're gonna discuss that about that later. Okay, so now I want to talk about the Our Builder program. pre-construction house, condos, investors, smaller properties, detached house are very hot on the market. Okay, so this year and previous year, because the market and the interest rate is unreasonable, as we all know. So we have a lot of assignment sales too. How can we be able to help our client? First, if they are purchase builder project as first time, or they sign contract as original owner, so the condo will close maybe 2 years, 3 years, 4 years after. All the builder require pre-approval now. Some builder more strict require commitment. Commitment means that they want to guarantee closing 100%. After 3 years, they want to them have a mortgage already approved as of today. So as a bank, we are more than happy to introduce our builder program. Not only we can book the interest rate guarantee for 36 months. However, we can be able to guarantee the closing and the mortgage amount for the approval for up to 36 months. It means if you purchase a condo today, I did your application, you're approved. Even though after 3 years, with your condo closing, you lost your job, it is okay. It will close. Okay, so, well, this is maybe not really impressive for some other client, but think about this. You purchased a condo in 2015, and you close the condo 2019 or 2020 is COVID. And unfortunately, you lost your job. Nobody knows. How can you be able to close it? If you have the pre-approval from us, it is okay. Don't worry. We will honor the approval 3 years ago and will close your condo at a very reasonable interest rate. Example, another example. 2020, interest rate is 1% something. Everyone's so happy, right? So you purchased a condo in 2020, and we're closing it this year. As we all know, 5.5, 6.1 as variable rate. So if we have a pre-approval, we still honor you 1.5% as you booked it 3 years ago. How amazing is that, right? So that's how can we
Can
do
you
it.
transfer to another client?
Unfortunately, no.
I want to buy it.
Buy the mortgage,
Unfortunately.
trade it.
I will try my best, but I don't think it will do. Okay. Okay, so not only we can be able to do a pre-approval, so we need to, today I'm going to take more time to introduce our special program for pre-construction condo. Closing today, which you purchased a few years ago. How can we be able to get your down payment back? You all know when you purchase a condo, it was only a contract. You have to pay at least 20% to the builder as deposit. And on the time closing, we give you 80% loan to value. It means that if you purchase in 2020 as example, and the contract price from builder is 500,000, you give 100,000 already within the 2 years. This year closing, you need 400,000 in mortgage. All my clients be really happy. This year we are closing, and not only we give them 400,000, we give them down payment back. How can we do that? So the contract that we purchased a few years ago, after 2, 3, 4, 5 years, it already increased in value. That's the beauty of pre-construction. So only all 5 major banks, only BMO have this program. So as of today, when I do the appraisal, if the property worth 800,000, before your closing, instead of 400,000, which you need to close the condo, we give you 80% of 800,000. We give you 640,000 on your mortgage. That means lawyer will take the 400,000 from my money, not my money, the bank money. I hope it's all my money, but from the bank to give to the builder to close your house. Give you the difference of 240,000 a check to you as a cash. not only you get your deposit
So you get a
back.
free place.
So
And then
that
you
is
can buy
the
another,
down
you can buy
payment
another two
for
places.
that.
And do the same thing again.
What's the
How can
catch?
we do your business and make money? I'm here to help you guys. Right? So those are the equity from the increased value from the condo.
So going back to your previous illustration
Mhm.
about if your mortgage was pre-approved, let's say 3 years ago
Mhm.
at 1 point, let's say
Yes.
5%,
Mm-hmm.
and interest rates are now 5, would the new mortgage be based on that pre-approval of 1.5%?
That's a very, very good question.
Or is it now gonna be current rates because of this value program?
Or blended.
So whenever we tax application from the previous approval,
Changes.
interest rate changes,
Mm.
unfortunately.
But I
However,
think before you said that you would still honor the previous,
yes, but the previous approval only based
Only
on
the
the
400,
purchase
only
price,
400.
the 400. If you still taking the 400, you're
Yes.
not increasing the value,
yes,
interest rate and approval still apply. However, if from 400,000 you want to increase to 600,000 because we are doing changes from applications,
New
Yes.
application, yeah.
then the interest rate will change.
could it be a blended rate?
No,
Because we're only taking an extra,
Yeah.
we're only taking
240.
an extra 240,000, right?
unfortunately, no. Whenever it's,
You
we
change,
make
you
a
change the whole
changes and
thing.
then the
Eric is
everything
untouchable.
happens.
Eric,
Untouchable.
that's what we want, but that's not what the bank will be given to us.
Well,
Yeah,
what's in the worst if you book at the 5% as of today and we close 2-3 years later, interest rate will
Lower,
drop.
yeah.
Now you want to touch your application to make a lower rate.
Hopefully it's
You wanna
lower
touch
2 years
it.
later.
and you'll do that, yes?
Yeah, it will work both ways. Yes, I will more than happy to do that for you, right? So, but the thing is, we're giving you an opportunity to taking out from your investment and give you chance to continue invest for the next project.
Mhm.
You make more money.
How long has
other
this
than
program been available?
It's new.
Yeah, I never heard before,
Yeah,
I
yeah.
feel.
Yeah.
How long?
You have to all talk to me.
That's
So
why
it's
you're
should've
been
here.
came in here
up
like
for
a year
a
ago.
year
It's
already.
About a year?
About a year, about a
Okay.
year, yeah.
That's why you're here.
Not everyone wants to do that because it's more work related. However, I love to do this kind of a deal
It's a great
because I
problem.
really love to do all the investment properties, rentals. It's challenging, but I love it because I can have my client, have my partners to build up all the portfolios and business. Everyone wants to get into the market. The real estate market is stable. I'm not saying that, hey, why you saying it's stable? It's the interest is high and not enough inventories, and everyone wants to assign the pre-constructions. But for long term, right? So more than 500,000 new immigrants come to Canada. They all want GTA and GVA. So we are here at best territory location and more opportunities coming. We need to prepare ourselves at this market, and then we can have client next year, 2024, 2025. How can we be able to guide them, give them more money, so they can invest better? And yes,
Is this like a short-term program?
No.
Or it's gonna be like kind of,
I don't
Long-term.
hear anything. We're gonna stop that.
okay.
Yes, so it's good.
So you
All
get
clients were
low
surprised.
deposits.
Are they real?
Yeah.
So on the closing,
Yeah.
I'm getting my money back, but then he will tell you later how
You
can you
just
build
keep
the
buying more.
receipt. Okay, so you can buy more. And client always ask me why I need more
That's when you slap them.
mortgage on my property. Interest rates are very high. I don't want that. Remember we talked about before last slide, the line for credit. I can have a line for credit for you. If this is your primary residence and you don't want to borrow 640,000, I still give you 640,000 credit limit. Borrow whatever you need to, and the rest will sitting there available for you whenever you need to. So no additional interest needs to be paid, and there's a credit room for you to access it whenever you need to. Maybe buy a nice car, have a nice vacation, a diamond ring for a wedding, right? Or to visit your family, whatever.
How are you finding the qualification process now that clients are applying for a much higher mortgage on this investment property. So initially, they started out qualifying for this mortgage at 400,000. Now we're looking at 640,000. So what has the hurdles been like in terms of going from a 400 to a 640,000?
That is a really good question too. So as a primary residence, as I said, if you don't want to borrow more, of course, because you have no any benefit but paying more monthly payment. So I give you a line of credit. So take whatever you want to and pay whatever interest you have to from the calculation. And the rest, the difference, you don't really need to take out from the line of credit. Put it back, and you don't have to pay for the interest. Whenever you need to, whatever amount you wanted to, withdraw from it. However, if the subject property is rental, why don't you take the 640,000? Use the money to pay back your primary residence. Why? Because rental property, everyone have a very good income, and I know that T1 General, how can I save money? Oh, this year I have to pay CRA 200,000, 300,000 for nothing. You are always want to have your T1 General show shortfall from the rental income. So you get your money back. The money have to deposit into your primary residence, because your primary residence, there's nowhere to go. So you're taking more money from the bank, paying higher interest from the rental property, pay back to your primary residence or whatever you want to pay back. You save money and the monthly payment from your primary residence, and you pay less income tax. How good is that? Instead of you have 100,000 or $1 million from your primary, 200,000 from your rental property, and end of a year, the money you're not saving yet, you're paying to CRA for nothing. Just give it to the bank and have a very healthy portfolio. When the tax return come to at the end of the year, now you know what to do. You're not borrowing more money over total loan amount is the same. Just you shift it to the rental property. Make a better payment from your primary residence. That's what you want to do. Okay?
So this 240,000 is an equity line of credit?
Or cash.
Or cash.
Whatever,
Either way.
either way, whatever you
Okay.
want to. Okay?
Excellent.
Yeah, so I'd be happy that you're taking cash and use that as investment or pay down your primary residence.
Yeah.
Yes.
Buy a new Lambo.
Okay, so what is the qualified rate? I want to talk about the trigger rate a little bit. So it's very hot topic, and maybe you have a client come to you saying that I'm not ready to purchase an investment or purchase anything yet because first, I don't think I qualified. Second, my existing mortgage already triggered. So I have a very large monthly payment now than 2 years ago, and I can do it. I'm struggled. Okay, qualified rate previously is always 2.5%, 5.25%. Why I'm saying that? Because the customer interest rate is very low. So the interest rate plus 2% is how we qualify client. No matter you choose 1 year, 2 year, or 5 year fix, 2 years ago or 3 years ago, your qualified rate always 5.25 because the interest rate. As of today, client interest is more than 5% everywhere. So 5% or 5.5% plus 2%, you're looking at 7.25% to qualify you for a mortgage. If you reach your trigger rate, then previously if you have a variable at 1.25%, now your monthly payment gonna double. How can we handle that? Always we have 3 options for your client. First, do the lump sum payment. Second, increase the monthly payment. Third, switch your variable rate to the fixed rate. However, my recommendation is, if you're looking to have less stress, or if you purchase the next property very soon, don't do fixed yet. Don't do fixed yet. At the time you do fixed rate, your monthly payment will immediately increase. Do lump sum payment or increase your monthly payment at very minimum. You're not gonna solve the problem by do the first two options. However, we can push the problem into the future date. Hope the interest rate will drop, so you have less stress from your monthly payment, then your cash flow is better. It will automatically make you qualify more for your next purchase. And also to push your trigger rate at a higher level, it will not solve the problem. However, temporarily, you're still safe. Interest cannot be able to stay 6% forever, guys. Of course, it will not decrease next year. That what I heard from the meeting yesterday, unfortunately. But it will reduce. Long term, it will reduce. So don't rush to, oh my God, I'm terrified, I can't do that, let's just not only any money, just do a higher monthly payment. Yes, you can do that on your primary residence. However, what if you fix for 5 years fixed at today's rate at 5.25% or 5.5%? After 1.5 years, let's drop it back to 3%, and what do? Are you gonna stay at the 5 years fixed at a much higher rate for another 3 years? Are you gonna break term and pay for the penalties? Right? So let's just manage your monthly payment and cash flow for the recent year and a half. So we can really hope for a better monthly payment after. Okay, so whenever client have a question, what should I do? Maybe just something that you can advise them. Don't be panicked. It's still good market, even though there's risk. However, it comes with opportunity also. Okay, so any questions for pre-constructions in
Is this
assignments?
applicable to assignments as well, Angie?
Assignments, yes. However, you're not going to get money from assignments, but we're going to use assignment price to give client 80%, or in shorter mortgage. So that means 5% or more. Okay. If your original owner to purchase from builder directly, then we give you the equity back as to this case.
Yeah.
Either or it works.
So assignment, you're only getting the
Assignment price.
Assignment
It's same
price.
as the market price. Because assignment,
Yeah, because you just
Yeah,
bought it.
yeah,
right?
yeah, because you
Yeah.
just bought it. So we
So
honor
resell.
and we understand it's already increased the value. The seller need to get their profit too. So as buyer, we're not gonna make you to do only their purchase price, because it's not fair. We use the appraisal price to give you 80%. However, you're not gonna get money back because the money have to pay to the seller. If you're original owner, then of course more than happy we give you money back.
In my case, there is somebody who's actually works for the US, so you know that he's dealing with some other banks, and they are not giving him a long-term approval. They're only doing a 60-day approval.
Mm-hmm.
So that's why he can benefit from this program where you can.
100%. Okay. So now we talk about the investment properties. I really love to talk about this topic. The reason why? Because not only our realtors, but a lot of clients have mindset say, oh, I'm making 100,000 per year. So nowadays it's a 4 times or 4.5 times of my annual income. I already have a 400,000 from your primary residence. Even though how bad, does not matter how bad I want to purchase the next condo or investment property where I want to upgrade. I can't keep my current one, and I'm not qualified. No, don't think about that. Yes, you're qualified. If you have a more than one property, especially you have a rental property, your qualification no longer be your annual income times 5. You qualify for more. How? Your existing rental properties, we can use your rental income to offset, not add on your income, to offset your existing monthly payment. Example, I have a rental property, monthly 400,000 mortgage, monthly mortgage payment $2,000. My rental income is $3,000 per month. How can I be able to qualify to purchase a new property, not let this existing property to damage my application. We use your rental income to offset your mortgage payment. Whatever surplus we add back to your income to qualify for next property. What shortfall? Example, if you're not balanced and then you have a $500 per month shortfall, it is okay too. We just deduct from your income to qualify your next property. So 100,000 times 5 is 500,000. You can still keep the current rental property and buy the next one, a bigger one, a better one. Even the next rental property if you want. Maximum rental property we can qualify use 6. I do a lot on regular basis, on daily basis. Client keep increase their line of credit or mortgage amount to have more properties purchased. It's healthy. Why? Because your existing or upcoming rental property already appraised at a reasonable monthly rental income, we know it will offset your monthly payment, so you're safe. Okay?
And you're using the full amount of the difference between the mortgage and the rental, or you're only using half of the amount?
We're using 80% or 90% of your monthly rental income to offset. Not half. Half is too little. We don't do that.
So if
we don't want
if
to do
the
that.
mortgage on the rental property is 2,000 and the
Exactly.
rent is 3,000,
So 90%
using
of the 3,000 if it's a
90% of
condo.
the 90% of the 3,000 or the 1,000 difference?
90% of the 3,000, your full rental monthly income.
Okay.
If it's a condo, if it's a detached or a townhouse, we use 85%.
Okay.
Because condo have a condo fees, so we use more to offset. Because detached or freehold freehold townhouse, we don't have a maintenance fees, we use 85%. It's fair, right? So not different, but we use monthly rental income to up to 90% to offset.
What about if someone has a part-time income as well as a full-time income? Do you use the
Both.
full part-time income?
We
Or-
use the full-time income plus the bonus incentive plus the part-time income.
The
Some-
full amount of the part-time income?
Full amount of the part-time income, but we
Okay.
have to calculate as if you're doing part-time, have to be more than 2 years experience. Full-time does not need to. So as long as you
3
have the
months.
pay stub, it's fine. Now sometimes not even 3 months. If you just started, it's fine.
Some lenders won't use your full part-time income, they only use half.
Yeah.
Some lenders
I will
only use half of the
explain.
part-time
So
income.
for business for self, as our realtor or IT contractors, truckers, whatever, if you register in corporations, as we all have like personal real estate company, right?
Yeah.
So, okay, I'm a bank employee. I pay more than 45% of my income. I have nowhere to go. But you guys have a real good program, but the beauty is you can leave all the money into your corporation.
Yeah, that's true.
But you report maybe very little from your personal income. What we can do to help you guys? We can use your business net income to add back to your personal income. It's all your income.
Oh,
Mhm.
nice.
Even if you're not withdrawing it.
Even though you're not
keep it in
withdrawing
your
it, you keep
business
from your business, you keep into your business account. We use that. You have to be 100% owner. It does not apply to, I have a company, trading company, I have 3 partners, each own 30% shares. I'm talking about IT professionals, lawyers, doctors, realtors, truckers. Okay, so we register a company only for just to really reduce our end of the year tax, right? So we can do that.
So 100% of the corporation income, net income plus the personal
More or
income.
less. Yes. So sometimes we cannot be able to use 100%, but we're gonna use a very reasonable amount to help you get through the deal. That apply to rental properties too. Okay. So never ever think about 4 times or 5 times of my annual income. How am I qualified? Do I qualify? Yes, you are. And they can just really
Check with you first.
yes. Yes. How can I go back? Oh, sorry. Okay. Okay, so now our new to Canada program. Do we have new immigrant clients?
Yes.
Alice?
Yeah.
Yes. More than 400,000 newcomers come to Canada. They all landed Toronto, BC. So we're talking about the GTA, GVAs. Okay. So how can we help them? It's a very big market. We want to focus our new to Canada client. They are wealthy. They have money. They have strengths to purchase more properties. It's very good clientele if you have a majority of them come to you and get a property. Going to be sold very quickly. Okay, so what about mortgage? How can we qualify them? We can use their overseas income. They don't need to have a Canadian income, or they don't need even to have a job in Canada. Because we understand they have very good experience or background overseas. They're still working overseas for a permanent reason, and their family maybe will move to Canada for educations, or the wife gonna bring kids come to Canada, like just the mean right the money on the whoever to have a job, study job overseas, they're gonna as a support, they're gonna fly back and forth. We use their overseas income to give them to use as a mortgage qualification. Requirement, down payment have to be 35%. No negotiation. 35% of down payment and 65% loan amount. Maximum qualification, $2 million from the mortgage. Not the purchase. $2 million from the mortgage. Okay? So that means if your client wants to buy $3 million house, it's doable. Okay.
How about 2?
No more than 2.
So they can buy 2, right?
They can buy 2 if they
Okay.
qualify.
Okay.
As long as you have a 35% down payment and those money can be gifted. Our other bank wants to see 3 months of a transaction, so make sure that those are their money. Us, it is okay. Down payment can be gifted. You don't have to show down payment in your account more than 90 days. As long as the money wired to Canada 15 days before closing. Before closing, not before you put an offer. It is okay.
15 only?
15 days before closing.
Not 45.
No, 15 days before closing.
Do they have to see where that money came from?
If it's within the 500,000, no.
Okay,
I can
if it's
help.
under 500,000.
More than 500,000, unfortunately, I need 3 months of 3 months of confirmation overseas bank.
Okay.
And it has to be wired from overseas? Can it be wired from anywhere or
Anywhere
like
is
local,
fine.
local?
It's
too?
a
It's
gift.
fine. Gifted.
Gifted,
That's
yeah.
my
Gifted
friend,
payment.
my
Yeah.
relative.
Yeah.
So
Mother, father, sisters,
Okay.
immediate family is fine. Try to stay within the 500,000.
Can they give you cash?
We can talk about that later.
No, it happened.
There's a way.
And I have
Bit,
100,000
how about
cash.
Bitcoin? We do Bitcoin.
Don't go there.
Yeah, there's a way too, see? There's a way. Yeah. He's like, yeah, Bitcoin, yeah,
Well,
there's a way.
well.
How are you concerned about the new immigration?
5 years
5 years.
from your landing day. Not your PR card expiry date. 5 years from your landing day.
Okay, so for the overseas income, how, you know,
Letter of employment, pay stubs, I will have a list for you guys.
if they come to Canada overseas years, how success they have a, you know,
We have a list for you. Yeah, the requirement is simple. 2 properties maximum. Okay, so to use overseas income, if you have a local income and you qualify from the local income, 6 properties. Okay, we only talk about new to Canada program to use overseas income. And other question always I get to ask is, what about I'm a Canadian and I work overseas? Do I qualify? Yes, you are. If you're Canadian, you're not a new immigrant, you're Canadian, and you're working overseas, yes, we still can use your overseas income. Same qualification, 35% down payment. We don't need your Canadian income or any kind of a confirmation from Canada.
How can you prove that?
I just need a Canadian passport to confirm you're Canadian.
Later.
Single Canada. That's it.
New immigrant, PR card.
Non-residents.
Non-residents with no PR card or Canadian passport, unfortunately, you're no longer qualified to buy property.
Yes.
Yeah, for
That's, yeah.
Non-residents.
We used to do non-residents for 40% down payment. However,
2 years.
shame is not as is.
Yeah.
So, but Canadians, new immigrants are okay. We will welcome them, come to us, and to help them.
So how about Bitcoin for real? Can they do anything or no?
We'll talk about that
Because
later.
I do have a buyer that
Okay.
and he wants to buy. He has Bitcoin.
Can you do the refinance for the long residence? Refinance for long residence?
Non-residents?
Non-resident.
No,
Oh,
no.
okay.
So even new to Canada or any program we use overseas income, yes, we can do refi. However, you're not looking to taking more than 100,000 or 200,000. It's only for renovation purposes only, no structure change. Okay. Okay, so professional program. Stated income. We welcome all the professionals, not lawyers, sorry, doctors,
Doctors.
dentists, they all business for self. They graduate, very good potential, higher income. No any confirmation from tax return yet. We use stated income still can help them, make them qualify to purchase the first house and to upgrade later. I'm not going to spend too much time to really educate my client or my partners how you qualify for the mortgage because it's my job. I really want to introduce our program and possibility to give you more information to know lots of a potential client has the possibility to continue invest or purchase more property. I'm here to help, and I will be your strong support. Whenever you have a question, shoot me email, give me a call. I will give you the plan or some idea at least to help your client to close. Okay, so anytime, any more questions, just let me know. And now I'm gonna introduce my lovely and beautiful partner and friend, Sandy. So she's very good. We've been working together for quite a bit of time, and especially for pre-constructions and all the condos closing. And she was the person to hand the bank draft to my clients, so they're really happy. Some of them does not believe it's a good news. Okay.
So
Okay.
you're the center.
Yes,
Santa.
thank you very much, Angie. So I'm gonna hand out my business card. I'm gonna learn the trick from Angie.
You should have went first. Starbucks, yeah, you do Starbucks. Yeah.
Oh, okay, turn next time.
Next time.
I don't
And I
know
want
one.
to, I think it's passing around. So,
Yeah.
I want to confirm
Starbucks.
I want to confirm Angie's story. So we do have clients. I think it only comes from BMO. I haven't seen from any other bank.
Only
right?
us. Okay,
Yeah.
remember my name, guys.
Yeah. So I have seen
And
yes. Do you need? Everyone got one?
Yeah. I
Okay,
think so.
okay. So we do have new construction closings, and upon final closing, we calculate the number for my client. And my client is asking us, how much do I need to bring? And I tell her that you don't need to bring anything. You can take away a check when you come in to sign after closing. Okay, so that does happen, and it's special program from BMO, so it's very good to know. Can I switch to my?
Sure. I just don't know how to do it. I'm really not good at editing.
Okay, got it. All right, okay, so I can also use this, right?
I think so.
Yeah, okay, great. So today, the topic we're gonna share with everyone is about assignment. It's actually a rather complicated procedure because it can change a lot over time, and there's a lot of details that you should pay attention to protect your clients and to ensure a smooth closing. So first, I'm gonna introduce a little bit about myself. So myself is a licensed lawyer in Ontario. My law firm is not far away from here. It's about 10 minutes drive. We're at Highway 7 and 404, and we have a legal team about like 10 people. And we mainly focus in two areas. So we do real estate law, so everything from purchase and sale of residential property, commercial property, new construction, assignment, title transfer, title gift, refinance, private mortgage, so we deal with pretty much everything in the real estate area. Anything that possibly you are going to take on, we can help basically. And the second area we focus in is the corporate law. So we help a lot of small business in Ontario. For example, we have a lot of clients like restaurant, gym, flower shop, and so basically all the small business, and we can help them from anything from if they want to get a location, so we can review the commercial lease, and maybe you have helped some client with business asset purchase and sale, so they're gonna need a lawyer for that closing, and we can draft shareholder agreement, share purchase and sale transaction, so basically anything that a small business need. Okay. So this is our brief introduction, and that QR code on my card is actually my WeChat. For those of you who don't have a WeChat, feel free to email or give us a call and address the email to me, and I'll make sure you get an immediate response. Okay? All right. Okay. So we have. I'll try to keep it short as well, but a lot of information to cover. So I just want to make sure that after the presentation, you have an idea about what you should look out for during an assignment. You don't have to remember everything. So it's good to have an idea, but you can put in a lawyer review condition in your assignment agreement, and we can take care of the rest for you. Okay? So just want to see how many of you have done assignment before. All of you guys? Okay, all right, okay. So we're gonna quickly go over the assignment procedures first. So for your convenience, most of the PowerPoint slides are in both Chinese and English, okay? But the presentation is gonna be English. So just quickly go over the procedure. I'm sure a lot of you are familiar with the procedure. And then we're gonna talk about what you should do before the assignment agreement is firm, and what you should put into the assignment agreement that's overlooked a lot. And then we're gonna talk about some other point after the assignment is complete, okay? So what's the procedure like? So in the very first, when the assignor decide to do assignment transaction, they're gonna ask you to help them find a buyer, right? Normally through private channels, because you can't really go through MLS listing or other public advertising channels. So you're gonna ask the vendor. So here the vendor means the developer, the builder, so the seller side, okay? So the vendor, you're gonna ask the vendor whether they're accepting assignment request, and after you get a yes answer, you can find the assigner a buyer, okay? And then you're gonna draft the assignment agreement, and both sides will negotiate a bit, and then you'll sign the assignment agreement. At that point, if you put in a lawyer review condition, that's where we come in, okay? But regardless, it's optional. The next step will be the assigner and the assignee, you waive all the conditions in the assignment agreement, and then the assigner side submit assignment request to the vendor, and the vendor will say, okay, I potentially can approve this. Here's my list of requests. They're gonna give you the list, and then the assignor and the assignee will each prepare their set of document and funds. Normally, the vendor will require the assignee to submit documents such as their ID, personal information, SIN number, mortgage approval. That's where the bank comes in, where NJ can help you. And then assignor needs to pay for the vendor's fees. If there's any fees required, there's almost always some fees required. After we submit everything, the vendor will take a look of the money and the documents and everything, and they're gonna say, okay, we approve this, it's gonna be good to go. And then at that point, the vendor is gonna produce you their assignment consent agreement. So that's the consent that we normally talk about. But to the vendor, it's actually an assignment agreement. But just for clarification purpose, we'll say they're gonna produce to you the assignment consent agreement. After receipt of that, the assignor and the assignee are gonna sign the agreement, and you submit it back to the vendor, and the vendor will ask the representation to sign and return it back to you. So at that point, that's the time we're gonna say you have received the vendor's consent, okay? So it's a 3-party signed assignment consent agreement. So after that, both sides' lawyer will work together to do the assignment closing, okay? So that's basically the procedure, okay? So any questions that you have at any point, feel free to let me know, because normally when I do the assignment presentation, I get a lot of questions, okay? So don't be shy to ask. Alright, okay, so that's the general procedure, and we'll now dive into the procedure, okay? So what's gonna happen before the assignment is firm? So you normally put in like at least a few conditions in your assignment agreement, right? And before the agreement becomes firm, there's a lot of things that you can do and a lot of things you should do, okay? The reason why I say assignment is complicated is because it can take a long time, and if you don't do the preparation well, it's very likely that the assignor and the assignee can get into some sort of dispute later down the road. And not only you could potentially lose the deal, and sometimes we have seen real estate agents, they have to pay some cost to settle things for them, okay? So that's why the preparation is very important, okay? So after the assignment agreement is signed, before all the conditions are waived, here are some things that you should do, okay? So first, you should confirm with the vendor whether they are actually accepting assignment requests at this point, because each vendor has their own window open for assignment. They're gonna tell you the window in the original purchase agreement, but you can't always rely on that because you wouldn't know whether the conditions are met, right? Sometimes the vendor will say, we're gonna start accepting assignment request after 90% is sold, 80% is sold, and they're gonna say we can accept this a month before occupancy closing or final closing. So the best way to confirm is always just ask. So ask the sales office, are you accepting assignment requests right now? And they're gonna tell you a straight answer. And the benefit of that is if you don't know this, you go ahead, sign the assignment agreement, and both parties start to wait. They can wait for a long time, sometimes even months. And the market change, assignor, assignee's position change, and they're gonna argue, okay? So it's important to confirm that. And the second thing, which is one of the most important thing, is to confirm whether all the benefits are transferable. So that means when the assignor first purchased the property, signed the agreement with the vendor normally will give the assignor some benefit, right? I'm sure you heard of those benefits before. For example, the vendor could provide a cap on the development charges and levies. The vendor could give the assignor free upgrade, like we'll give you free blinds or free other like things at no charge, and the vendor can give the assignor a credit. They can say will just do a cash credit, a few thousand, or they can say, I'll credit you for the management fee for like 1 year or 2 year. And the vendor can also give the benefit of the right to lease during occupancy, okay? So all of those are kind of benefit that the assignor will get. So it's important to confirm that after the assignment, whether those benefits will remain still effective. Because a lot of the vendors these days, they say that as soon as you do the assignment, we're gonna take away all the benefit. You're not gonna get the benefit, okay? So if you know the answer before the assignment is firm, then you can do some actual negotiation. Normally, in that case, the assignor and the assignee are gonna share the additional cost, because from the assignee's perspective, I'm losing some cash value, right? So they can negotiate to settle on this. But if you find out after the assignment is firm, then the position is going to become different, right? They're all going to say, the assignor is going to say, the deal is the deal. I don't make the vendor's decision. The assignee is going to say, that's not the deal I signed up for, okay? Then the third point is that from the assignor's perspective, you should confirm with the vendor very early how much is the assignment admin fee. So in some original agreement, you're gonna see that the vendor has waived the admin fee or they capped admin fee. They'll say $5,000 for the assignment, but the best way is still to ask, because you don't know what happened before, right? We have seen cases where the assignor has some default action, so they advertise by mistake. So the vendor took away the free assignment right, and you have to end up to pay, right? So it's the best way is always to ask the vendor, so ask the sales team, what's the assignment admin fee? Don't assume it's just gonna be a few thousand, because I'm working on a case right now. Actually, it's very, very expensive. The vendor actually charged 100,000 as the assignment admin fee. Okay, that's 100,000.
Oh,
Yes.
Project.
That's
Yeah.
an expensive end.
It's a very
from the profit, like
Yeah,
they are
it's a
charging
very
now.
expensive detached new construction property. Yes,
How strict are they with the no advertising clause?
very strict.
Very. So if they can find it, they'll use it against you and say, look, you can't do it. 'cause
It's
you
gonna
advertised."
charge you.
Yes,
Can you advertise on like Kijiji, Craigslist, or just no
it
MLS?
depends. So in all the original purchase agreement, they're gonna have the no MLS listing advertising clause, right? And each agreement is written a little bit differently.
Mhm.
So you have to take a look at the wording, and sometimes we often get involved. After occupancy, the client will ask us, oh, can I advertise now, right? Can I find a rental, a lease, like a tenant? At that point, we're actually gonna help them confirm with the vendor's lawyer, and they're gonna tell us. So the best way is always to ask, and I know you must have heard questions from clients like, I see other people from the
Yeah.
same building advertising, right? So it all depends. Basically, I'll say in almost all the agreement, the vendor is saying that you can't advertise publicly or on MLS listing. It's just a matter of time if they decide to actually go after those people. So we have seen cases where the agent actually helped the client to advertise, and the client will get a default letter from the vendor's lawyer.
You did?
Yes.
You know
Yeah,
what?
2 years ago.
You know what I did? I put it on for the weekend and then I deleted it off the system.
That's smart.
on MLS.
Yeah.
And I got it.
That's
You know,
what
when you
you
saw
want.
the agent,
Huh?
put it-
Don't put the address, right? Don't put the full.
No, I put the address, everything.
you
I put it on the
don't put the
weekend.
unit number.
It closed. It went fine.
Oh.
Oh.
We got
Yeah,
lucky.
so just be careful
I've heard
because
some of my clients they charge
Serious.
$3,000
Yeah.
because their agent do KGG, and actually
Oh, you do
builder
KGG.
hire someone to call pretend to be
Oh my god.
a client.
so they do fishing.
Yeah,
So
they do
back to
fishing.
your point, they will get to the bottom because they make money, right? We have seen 3,000, 5,000, or even more of a penalty. So they make money just by hiring someone to do
By-
that. Yeah. So in this market, they do. Yeah.
So even
At
after you
end
get
of the
off,
realtor
Even
pay for
better,
the car.
I had a broker
3,000.
record call me.
3,000.
Yeah.
Were they
So
still
this
able to do the
applies.
assignment or
Yeah.
is it
Assignment,
No,
I was
no,
applies
advertising.
They have to
assignment,
That was
occupancy, all the
KGG
stages
for-
until final
until
close.
final
Yes.
close.
Yes.
But after you get
Yes.
final closing, you can do
It's
whatever.
yours. If the title is yours, it's
It's
yours.
yours
Yeah.
and you cannot.
So,
By
no job.
advertising, if
The
you
assignment.
put the amount, if you just say assignment
Three
sell,
months, I cannot sleep.
Such
You know,
and such.
I like to pay $10,000 to solve
Is
this
this
problem, but
considered
I
advertising?
found no
Yes, it
way
is.
to
Yeah.
do it.
So it's any sort of advertising, as long as they can trace it back to this project, this unit, they will know, right? It's not about the information you put in, it's about advertising itself. And one of the potential disadvantage for this is that if they don't catch you, then that's fine, right? The client will be fine. They actually get a benefit out of the advertising. But if they catch you, the vendor will say that we're charging you a fine, we're charging you a legal fee, and some of the benefits that I give you before is no longer effective. I'm taking away the benefit.
If you send emails that not considered like a private email, it's not considered as advertising.
No warning letter sometimes.
Like you send it to your own
Well, if-
private channel.
If let's say I have like email list and I want to send.
Oh, that's fine. They wouldn't
it's-
know, right? They wouldn't know.
right?
Yeah, they wouldn't
I
know.
was
Like,
actually
not
caught,
considered
so
advertising.
the email was actually, so somebody wanted it, and then the builder asked them, how did you get this? And then my email was presented, and they said, no, this is,
Oh,
you
really?
know,
Oh my.
Even
yeah,
email?
the broker of record, he actually called and threatened to sue me and take me to RICO and all that.
Yeah, we have seen vendors where actually the signor's agent find them a buyer,
Yeah.
and we submit everything to the vendor, and the vendor tells us, oh, we only allow assignments through this one brokerage. You can't do it through
That's
anyone
Concord.
else, right? Yeah.
Concord?
That's Concord, right? Because they have their own brokerage and they don't allow it anymore.
Maybe Concord give you warning first.
So
They
be
call
so be
you
very
Very
careful.
and
careful.
charge you.
Yeah.
Yeah, but
So
then-
the best way is always to send an
They
email
pin
to
that
their
on
sales
the-
teams. They're gonna
Right.
tell you straight. And
Just-
don't waste your time.
Exactly,
Right? Yeah.
they give you in writing.
They'll tell you everything.
Yeah,
They have
say-
it in template.
Exactly.
Have to save yourself some time, right? Okay. Okay, so the admin fee, okay? Because that's part of the cost for the assignor. You don't want the assignor to be surprised and they're stuck in the contract, right? They can't get out because it's too expensive, because it's not part of the condition. Okay. And the last point is the mortgage approval letter, because the vendor they're always ask the assignee to provide a qualified mortgage approval letter. And they have gone more strict over time, so it has to come from a tier 1 bank. You could go through a brokerage, but it has to show the bank's name. They're gonna tell you the minimum principal they require, and they're gonna ask for, there has to be a mortgage specialist or mortgage broker information on that letter, okay? So if you're doing assignment, make sure the assignee could get approval letter. You don't have to use this approval letter for closing. There's no connection between those two things. You just need to present it to qualify for the assignment. And then you can go with a cash deal. You can go with like different bank. Like you can do anything you want for final closing. You just need one for assignment, okay? All right, okay. So I know that you all have like a template for assignment agreement, right? You got it from your colleague, your brokerage, your past experience, but there are a few things that if you don't have in the agreement already, that you should pay attention to, and don't just use the template because each client's situation is different, right? So we have seen a vendor's consent condition in all the assignment agreement. So even if you don't put in any other condition, that's a condition that you always have, right? Because it's a true condition, you have to get the vendor's consent to do an assignment. So here you have to put in like how many days you're gonna allow the vendor to provide their consent. This depends on the window, right? So going back to the previous point, you have to check whether they're in the assignment open window right now. And you have to decide how many days you choose. You can go with, we have seen as short as 2 weeks, and you can go with like 30 days, 60 days, 90 days. So this can suit your client's interest, right? And you can also put in that if this, let's say 60 days has passed, what's gonna happen if we haven't received consent? So make sure you put in that to give yourself additional opportunity to complete the deal as well. If you represent the assignee, you can put in that after the 60 days expire, then the assignee can arbitrarily choose to extend it for another, let's say 30 days. So your client has a call, right? If you represent the assignor, you can make sure your client has a call as well. So this is the important part, because you can't control how long it takes a vendor to approve your deal. Sometimes it's really slow and you just can't push them, and they'll keep saying that like, because we communicate with the vendor's lawyer, right? They'll tell us my client is still reviewing, and sometimes it's really fast. It takes 2 days, so you can't really like predict this. So put in like extra days to protect your client's interest and your interest. Okay. And then the next point is about the timeline of the procedure. So on point 5, we're trying to control the whole timeline with the vendor's consent. And this point, we want to make sure if the vendor is responding to you and the assignor and assignee, they're working together in good faith to complete the transaction. Because you don't want them to delay this by saying that, oh, I just can't get a mortgage approval, I need another week, another 2 weeks, and then before you know it, that timeline has expired, okay? So you can put in that this actually governs both sides. Okay, because you want your client to act fast as well. So you can say that within a week after we receive the request list from the vendor, we have to provide all the information, documents, and funds. And you can also say that within like a couple days after receipt of the vendor's consent, my client will sign. Okay, so that governs the timeline. You can say that I'm not available. All right. So next we talk about the payment schedule. So we have seen 2 kind of payment schedule mostly, and they each favor a different party. Okay, so the first kind of payment schedule is more beneficial to the assignor. So in this kind of schedule, you pay for assignee pay for the initial deposit, which is on page 1 of your assignment agreement, right? That assignment deposit part, and then we wait for the consent, and we get the consent within like a few days, like normally 3 business days. You pay the balance, and we close the transaction. Everything like all the funds and commission, they get released, right? So this is the most easy, clean cut way. Okay, the first method, and it's also beneficial to the assignor. And the second kind is more beneficial to the assignee, but it's gonna be dragged a little bit more longer. So you first pay the initial deposit, and then you get consent. When you get consent, you pay for a second deposit, which is normally equivalent to how much the assignor has paid to the vendor as the deposit. Okay, you can decide on that amount, and then the last step is you wait for final closing, and upon final closing, you pay the remaining balance of the assignment. So this way, if you're using a BMOS mortgage, then that mortgage can actually help you with the assignment payment, because at that point, final closing, you get all the funds, right? You don't need to be out of pocket too much, even with the assignment premium. And it also beneficial for the assignee in terms of at that point, you're going to be 100% sure the transaction will close with the vendor, and there's basically no risk left. And if you see any weird adjustment on the final statement of adjustment, you can also adjust with the assignor. So the second method is very, very beneficial to the assignee. But in terms of assignor, they're going to be waiting for a long time, right? They have to wait for the final closing. So this really depends on the market, which way you can go with. The advantage is very obvious and very different. If it's a very hot market, then you're just fighting for a unit, then I think probably you end up with the schedule 1. But if not, if you can pick and choose, as a assignee's agent, you can go with method 2. All right?
Method 1, we could probably negotiate a better price for the buyer.
Yes.
One of my deals, the way I structured it is as soon as we got the deposit of the assigner, and that got released as soon as the conditions were waived.
Mm-hmm.
So the assigner got their money, and so even if the assignee didn't close, they were still profitable because they would step in and close, because the liability is still the assigner.
So if you represent the assignor, that was a very good deal.
Yeah, I was on the assigner's side.
Yeah, that's a very good deal. All right, okay. So let's talk about cost, okay, and some tax obligations. So when the assignor is doing the assignment, before they decide to actually go ahead and do the assignment, they must calculate how much they can actually make, right? That's how they set the price. So at this part, they have to consider, so going back to the previous point, the assignment admin fee and the assignment legal fee for the vendor. The legal fee is normally not much, it's mostly the admin fee part. And secondly, they have to consult with an accountant to calculate if I sell this as an assignment, how much taxes am I going to pay, right?
Yeah.
So it's the capital gain and the HST. That's the main part of
So
the
it's a
tax
whole
cost.
capital gain or 50%?
It's a 50%, yeah. Okay, so this is where you bring in an accountant normally, and the accountant will calculate, like, hypothetically, if you sell for this price, how much you need to pay, okay? And then we talk about where we get involved. So normally, we have to confirm whether the assignor is a Canadian tax resident. Okay, it's very, very important, especially after the change in HST tax law in May 2022, okay, last year. So if the assignor is a Canadian tax resident, then we don't need to worry about anything. The assignor only need to make a declaration with the assignor's lawyer to say that, yes, I am a Canadian tax resident, and as a tax resident, the assignor will be responsible for his or her own taxes, okay? If the assignor doesn't pay, then CRA go after the assignor, yes?
Question, HST and assignment, they usually include in the price, right?
Yes,
Like 99%, because
Yes. yes, it's included. in the
someone
price.
just got me so confused the other day. I was working on a assignment cell and it was like, oh, no, it's not included. Like, yes, you just pay land transfer tax, that's something different.
It's completely different,
That's
yeah.
completely
There's
different.
several different
And they increase
taxes.
it now. Land transfer tax is more than 1% now. I think it's like 1.
It's
1.5.
actually a curve, yeah. So you have to use it's more than 1% sometimes. You have to use the online calculator to calculate for the client. So there are a couple different kinds of HST and taxes involved in the assignment, okay? It's very confusing. So at this stage, in the assignment, there's only the HST on the assignment and the capital gain on the assignment. And after the assignment is done, the signing deal with the vendor, right? They become like the sale and purchase relationship, and then that's where you have the HST rebate. Okay, so that's
Exactly. Rent
If
it
it's
and then-
occupied,
Yeah.
if it's occupied.
So if they rent it and then you'll
You
have to
You have to
claim.
pay, yeah.
Yes.
Yeah.
But
And
you have
it
to pay
comes through from the
first,
bank,
Yes,
they don't have.
1 year later you
Okay.
can claim.
So for
Yeah,
that
okay.
HST rebate part, I can explain on that a little. So it's normally very confusing. So how it works is that let's forget about assignment for a second, okay? So you're just simply buying a pre-construction. You will see on your agreement with the vendor, there's a purchase price. So the purchase price that says $1 million, then that's inclusive of HST, because all new construction, they need to pay HST on the price, but that's inclusive. If you read the original agreement, you're gonna find it somewhere in maybe small print that it's inclusive in the price. But they also will tell you this $1 million is inclusive of HST and HST new housing rebate. So there are two kinds of rebate. One is new housing rebate, so that means if owner is occupying the property as principal residence. Second, there's a rental rebate. So they're both, generally speaking, $24,000, okay? It could vary, but generally speaking, $24,000. So this $1 million is only inclusive of the new housing rebate. So what this actually means is that the vendor is assuming you're buying to occupy. So they are saying that, okay, you're buying, then I'm assuming you're buying to live in it. If you don't live in it, there are gonna be some consequences. So in simple term, if your client is buying a new construction and your client is living in it, then in the final closing stage, you're not gonna see any additional charge, but you're not getting money back either, because it's already discounted in the purchase price, okay? So you're not paying, you're not getting, okay? And the second kind, if your client is buying and it's for rental, then final closing, your client is gonna see on the final bill from the vendor additional $24,000 charge as the HST rebate that you're giving back to the vendor, because the vendor is saying that, oh, you're renting, right? So I'm not gonna help you apply for the HST rebate. You pay it back to me, you apply yourself. So in simple term, rental, final closing, your client pays additional $24,000 back to the vendor, and then they have to rent it out, get at least 1 year lease, find an accountant, apply the money back. So they can still get it back, but there's a cash flow, right? Okay, so going back to assignment, so we now add the assignment back into this whole thing. basically it doesn't change much. So we're gonna get to it later where the assignor can't use the property, so the assignor cannot affect the assignee's qualification for HST. Okay, and then after the assignment is done, the assignee deal with the vendor on this HST rebate part. And because you did an assignment, the vendor is just thinking it's more complicated, I don't want to do this. And they normally just say that as long as you do assignment, I'm not going to help you apply. I don't care if you're going to be occupying or if you're going to be a rental, you do it yourself. So 80% chance in the past experience, if you do assignment, then final closing, you're gonna see that additional $24,000 bill. Okay, you're gonna pay that, and then if you're, doesn't matter if you're occupying, if you're renting, you're gonna have to apply to get it back yourself, basically after closing. Okay, but 20% chance, so it's only 80% chance, right? 20% chance, the vendors still help you do it. The chances are they forgot about this, so they're saying that okay, you're occupying, so I'm giving you the credit. Okay, so you have to see in the final stage, but be prepared for paying that amount. Okay. All right. Okay. So going back to this point, so this is during the assignment. Okay, it's about the assignor's Canadian tax resident status. So if the assignor is a Canadian tax resident, which will be determined between the assignor and the assignor's lawyer mostly, then you don't need to worry about anything because the assignee is not going to be responsible for anything. Okay, if assignor doesn't pay taxes as he should, CRA goes after the assignor. Okay, it's what we need to worry about is when the assignor is not a Canadian tax resident. So in that case, if assignor doesn't pay taxes, assignee is responsible. Okay, so we'll talk about capital gain and HST, okay, separately. So first, if one assignor is not a Canadian tax resident, then what do we do with the capital gain? We have to hold back 25% of the assignment price until we receive the tax clearance certificate. So how does this work? So it's normally confusing how much we need to hold back for, right? What's this 25% off? You have seen this in resale properties that is very straightforward. It's 25% of the purchase price, okay? But in assignment, let's see a little example. If the original purchase price is $700,000, then the assignment purchase price is $800,000, and the deposit paid to the vendor by the assignor is $200,000. Then in this case, upon assignment closing, assignee needs to pay to the assignor $300,000, right? So in this case, if the assignor is not a tax resident, then how much we need to hold back for? So we always take that $800,000 number. So you just look for the highest number, okay? So you look for the highest number, we're gonna hold back 25%. It's important to know this. If you get an accountant involved at that stage, the accountant will tell your client to do the calculation. But it's very important to know because it could affect the assignor's cash flow, right? They have to know how much they're getting upon closing. And right now, the tax clearance process is gonna take like 3 to 6 months. So there's the waiting period for that, okay? So this we have to hold back. So this is capital gain hold back, and then we look at HST. If the assignor is not a tax resident, then our side, so the assignee said, we have to make sure that the assignor actually pays for the HST. So the HST money can never actually reach the assignor's account. We need to make sure it's directly paid from the lawyer's account to the CRA. Otherwise, you wouldn't know, right? Once it's released to the assignor, then we have no control over this money, okay? So if the assignor is actually not a tax resident, there are 2 extra provisions that you need to put into the agreement to deal with this, to make sure you and your client are not liable for anything as assignee side, okay? All right, any question about the tax part?
Okay, so how do you deal if the balance due to the assignor is less than 25%? Because assignee's lawyer need to hold 25%, right?
Yes.
So how do you deal with
so
that?
we don't see that issue often because normally the deposit paid is like 20% and they still make a little bit premium, right? So we end up have like 25% maybe or just 25% in our account. But we have seen a very rare cases where it's less than 25%. Technically, like theoretically, we need the assignor to pay additional to make up for 25%. But in that rare cases, we did negotiation and we had an accountant actually issued a calculation of tax filing for the signor because in that case you're not making money, right? So that means you're not making money. Yeah. To prove that is actually sufficient, and we had both sides acknowledge the risk, and we settled for holding like I think it was just 20%. Yeah. Very rare though.
So for the HST only apply for difference, right?
Yeah, it's
Oh,
the HST. So because of the rule change in May last year, right now the HST only applies to the premium you're making, the profit you're making. So in that case, the $100,000.
That's reasonable.
Yeah.
That's
you have to give
reasonable.
us like a new purchase price, right? That's a
Yeah.
lot.
That's a
It's
lot.
actually
But
yeah,
normally
That's
they
just the
go
difference, that's
normally
good.
20% already paid
It's
to the
always been
builder,
the
so it should
difference.
cover the difference of the HST and also the
Yeah.
profit
Okay,
part.
this is a new rule. It's 100% sure only apply for the difference. Right.
So if you
13%.
remember the rule from before, it's self-assessment. So when you do an assignment as the seller, the assignor, you assess yourself to see if you need to pay HST. And assignor is just always gonna say, I don't need to pay HST. And the CRA will do audit. They'll come after you like, why do you like? I think you should pay for HST, and you have to find an accountant to argue for you to argue that this was not my intention. There was some unperceived change that happened. I was gonna buy this property, close, and live in it, but I
Builder
can't
delayed
control
it and it was not, we have
Yeah,
seen
secret
a few
change.
things,
Yeah.
yeah.
Got a kid
Yeah.
now.
I've done
So you
that
pay
myself.
actually
Yeah.
50%.
Yeah,
I did that myself too.
And plus 13% the balance of HST.
Yes.
This is what a seller has to pay.
Yes. So after the rule change in May, everyone has to pay. You no longer have to self-assess. The rule becomes more clear. Okay.
But it's better for the rent the
They have to pay the
investors.
realtor's
Yeah, it
commission,
does
they have
not-
to pay the capital gain, they have to pay the HST, and I'm not sure how much they still
But if
pay.
owner occupant they don't have to pay. But now everyone's the same, so it's better for investors because everything on the same
Yeah.
same level.
Angie is correct. 'Cause before the rule change, you can self-assess. That's the benefit. But if you're actually like the purpose for purchasing is just you're investing, right? Then the HST you have to apply on both the premium you make and the deposit you pay to the vendor. So it's a larger amount. But right now, like it's a lower amount.
So right now maybe not a good idea for assignment.
This rule is not gonna change back. It's gonna
It's
stay
forever.
this way. Yeah, it's gonna stay this way. Actually, I've seen a lot of assignment lately. It's just
I love assignments recently
It's
because
a
the
lot
good deals, not good
profit
deals.
is
Yeah,
low.
distressed
Yeah,
rather.
it's
So
good
people
deal.
are selling
Lots
for
of
a
people, they cannot
Lower
loss
price.
rather because they just can't close.
Yeah.
Exactly.
Yeah, it's
I'd rather lose a little bit than lose
to
everything.
sell.
Yeah, exactly.
Make more
And
profit, I think.
especially for
Right.
those non-res, they
in
can't
this-
close.
yes,
in
They
this
can't
kind of
close.
cases, if you close,
Yeah,
you need
so
final
this
closing,
is
right?
Opportunity.
You have to hold it for at least a year and a half. For the
To
HST
sell.
rebate purpose,
Oh,
yeah. You
yeah.
could sell, but you're losing that $24,000 right away. Yeah. So
So you have to
it's
sell
like
after
a-
1 year at least.
yeah, at least
After
1 year.
1
To a
year.
year
No,
and a half,
any
yeah.
property now actually, even the
Yeah,
Yes,
all
yes,
properties.
yes,
Yeah.
yes.
Looking for assignment sales, like they are really good prices.
Yeah, the prices go-
Some
I've even
non-res,
seen-
they're selling to you original purchase price.
Yes.
I've seen that a lot.
Yeah.
And me, I do can ask exception even though the assignment sale because you're buying from the original purchase price. I have a successful story that I gave you additional like same as your original purchaser
Yeah.
because you're not paying premium. But it's case by case. It's case by case. But I have few closing this week and last week to those assignments. They purchase at the original purchase price. Even though it's assignment, we still give you the appreciated value from the appraisals, 80%.
So
That's
now
how you
have
make
to
money.
To buy the
Only as
assignment.
can
On your being or
Yeah.
Yeah, assignment market, I even seen a few cases the seller is selling at loss.
I've
Yeah,
seen
it's
so
selling a
many right now in the market where they are
But-
selling at a loss.
Yeah, just
Those
desperate. Yeah.
assignments
Yeah.
is must purchase 2 years or even 1 year ago. It was
Yeah.
a quick
Especially
building
housing.
and
Yeah.
closing.
Yes.
If you purchase assignment 3 years ago and 4 years ago when they purchased it, never
Making money.
no
Lose-
they,
Lose,
no,
they don't
never
lose.
never
They don't
lose
lose
money.
money,
Yeah, because they
Whatever,
got cheap.
but
Like
you
a
got-
yes, they
year,
can
2 years
earn a
ago,
little
yeah.
bit, not as much as before,
Smart
but
market.
those ones are cheap, so they will never lose money.
Mhm.
But for one young, because I don't know why septic building they close very quick. That's why, and the occupancy fees is crazy.
1 year or not 1
1 year,
Pinnacle, right?
27,
Yeah, that
29
one is a
million.
problem near the water.
They advertise it as 1 year, but unfortunately it's not 1 year.
Oh.
Yeah, because the square per unit, square feet per unit price is high, but they such a large building, they close it within 2 years. So those clients who purchase from builder, they are taking loss, because never can afford it, and lots of non-res purchasers. Occupancy fees, everyone is more than 3,000 per month. How much you can rent? 2,000 to 2,500. You're taking loss. So those buildings are crazy.
Yeah, so their assignment, if you come non-resident, do they still, they do assignment, do they still need to pay like non-resident that tax, additional tax, like 35% or 35%?
No, so once you sell, you sell. But we do see, so you mean like as a buyer or as
Yeah.
a seller?
The seller. They,
Oh, so
they
the-
only,
The seller, because the seller never took title, right?
Yeah.
So they don't need to pay any ORST, non-resident speculation
Yeah.
tax. So because it never goes through the title transfer stage, so you don't have to pay that. Yeah. All right. Okay. So some other points that you may want to put in your assignment agreement. Okay. So first, we really want to confirm how much the assignor actually has paid for the deposit. Sometimes it's hard to get like additional confirmation from the vendor, so you may want to put in your agreement that we need the vendor to provide evidence of compliance. So the assignor actually they almost want to give you some other kind of proof. They'll give you the check that they give to the vendor, the postage checks, or the banking information. But we want to see evidence of compliance for assignee because that's the most official payment proof record. Okay, so put that in the agreement.
How is that different to the check copies?
Because you don't know if it's returned, right? So the evidence of
Good point.
compliance is like a letter issued. They confirm I've received this money. Okay.
You have to keep it, otherwise builder charge you $150 per page.
Yes.
Even
exactly.
though you don't do assignment, you do final closing at the bank, we need that too. Yes, I can take the bank draft that you deposit to the builder. However, for the most of the cases, if you have evidence of compliance, then it's better. And if you don't have bank draft and you don't have evidence of compliance, and unfortunately you have to go back to the lawyer, they charge you
$150.
So keep
per
it.
page.
Yeah.
Like how many installments did you pay?
Because you
4
get
or
it
5?
very early in the
That's
stage,
$1,000.
right? It's very easy to lose them. So make sure
I
you
know,
keep
it's
the copy.
really easy to lose them.
Yeah, so you were mentioned seller side, non-resident, if the buyer side is closing the
Yes.
deal, so they need to pay
They have
that
to pay.
35.
So if the buyer, the signee,
Yeah.
is not does not have status here,
Yeah.
then you treat it as the same in the resale closing.
Special for
Okay.
sale term.
There's no
They need to pay
difference.
like that.
Yeah. Yes.
Increase a lot.
Even their original buyer, if they closing,
Yeah,
that
it's the
you
same.
still need
It's
to
the
pay
same.
that.
As long as you're the one taking title, right? It applies to the person taking title. All right. Okay. And then we're at point 11. So in the two payment schedules that we were mentioning before, okay, in the first kind, basically the vendor, so the assignor gets all the payment before final closing. So you may want to put in this clause to say that after our assignment closing, if the vendor fails to close, okay, so if the project is canceled or something, you want the assignor to return the profit to you, because otherwise the assignor walk away with a profit and you're actually at a loss. You can get the deposit back from the vendor, but the premium part, that's gone. But this is, you can put this in the agreement, but it's actually hard to execute because at that point, assignor already took away the money, right? You actually need to go after them. That's why, back to the previous point, the second kind of payment schedule is a lot better for the assignee because all the money are still in the lawyer's trust account, okay? And then 12, so this is going back to the HST rebate that we're talking about, so that $24,000, okay? So the assignor cannot use the property for anything before assignment closing. They can't move into this a little bit. If they're already done final occupancy closing, they can't rent it out or ask a friend to live in the property for, let's say, a few weeks until assignment closing. Because sometimes the assignor may feel like, oh, it's at a waste. I'm paying for the occupancy fee. I'm waiting for the assignment, right? I may as well make some use of the unit. You can't do that. If you do that, then the assignee is very likely to lose their qualification for the HST rebate. So if you represent the assignee, put in this clause to make sure that the assignor is making the declaration and representation.
Are you gonna share a copy?
Yes, sure.
Should give you the template for the
Yeah,
office,
so you can copy and
just
paste.
just give us a template for the
I
office.
saw Steph's copy.
Yeah.
But if there's a lawyer review condition, we're gonna put in those clauses tailored to the client situation. But this is like generally a point to keep
I see.
in mind. Yeah.
The sign agreement, we
Yeah.
should find a
Yeah.
lawyer.
Yeah.
Just give us your
Yeah.
template and put your contact as a lawyer, and then you get the business too, right? That's it. Then
That's
once you
a good
use this,
idea.
you have
That's
to
a
use
good
this lawyer.
idea.
Too bad.
So the conditions that
Yeah.
are there as a part of the APS, even though there's a lawyer review, are your conditions precedent over the schedule?
Sorry?
So, as a part of the agreement, there is a schedule where the conditions will be, and there'll be a lawyer review
Yes.
conditions. Suppose the agent misses something,
Yeah.
the
We
lawyer,
can add them in.
so you are a precedent over the APS or the schedule that.
Yes.
Because it's conditional
yes,
upon
yes,
their approval.
Yeah,
yes.
makes sense.
Yeah, as long as it's within the lawyer review condition, which
Yeah.
is normally at least 5 business days,
Yes.
we can say that we want those changes if the other side can agree that it's in the negotiation period. Yeah.
Perfect.
Alright, okay, so 13, we have the indemnity. So this is just a general provision. So we want let's say, want the assignor to indemnify and seem harmless the assignee from anything that they did that had a consequence before assignment closing, right? If they had like a return, a bounce check for NSFE, where they had some other action that caused like a minor default with the vendor may keep the charge and charge you at final closing. So you're only gonna see that charge at final closing. So if you put in the indemnity clause, then at the end, if you see anything like that, you can actually go in back and say that you need to reimburse me for this. And this goes both ways. The assignee should indemnify the assignor for things that they did after assignment closing as well. Okay, so you're each responsible for your own action.
So how easy is to collect that kind of money?
It's if you had the second method of payment, then we can settle, we can do the adjustment.
okay.
If you had the first kind, not very easy. Yeah, the first kind of payment method is beneficial for assignor because they have the money, right? You have the money, you have the bargaining power. All right, okay.
Sue them.
Yeah.
Then
Well,
more
small.
money,
Yeah,
more
you
money for
can. It's when you have this clearly state in the assignment agreement, it's more easy to pressure the other side to give you the money because they know if we go to court, they will lose. All right. So the last point is about occupancy closing. Most assignment happen before the occupancy closing, but sometimes it also can happen after the occupancy closing. Then you have more things to adjust for, right? We actually as a buyer's agent, you would strongly prefer assignment happens before occupancy closing. It's just more clean that way, right? You're absolutely sure no one touched the unit and there's no other hidden things, okay? But if it happened after occupancy closing, you should make clear in the agreement that what we're adjusting for. Because at occupancy closing, the assignor would have paid another deposit to the vendor, right? They'll
5%.
say, yes, another like a certain
Yeah,
percentage. So you need to add that into your adjustment. And there's also the occupancy fee. So as Angie mentioned, occupancy fees are very expensive these days because of the prime rates increasing, right? So you have to decide if you're adjusting for occupancy fee. So the fair way and the most common way I see is that you don't adjust for occupancy fee. Assignor is responsible for the occupancy fee before assignment closing. Assignee is responsible for the fees after assignment closing. You just based on that date. You each pay for your own part.
And
right?
currently there is a bunch of closings that are happening during occupancy, so this is the perfect way. You
Yes,
have to be in the
yes,
middle.
Yes. And that's why it's important, going back to the previous point, you have to set the timeline because you don't want the assignee to delay this and to say, oh, I don't want to start be paying for this fee, right? That you can set a timeline to say that you have to do certain things within certain days to avoid the delay, right? Okay, it's all tied together. All right, okay. So that's what you can put into your assignment agreement. So now let's take a look at the vendor's assignment agreement. This is the consent that we normally talk about, okay? So the vendor can be very tricky these days. They put their condition for their requirement for the assignment in their consent agreement. It's customized. Each vendor has their own assignment consent agreement, but there are mainly 4 things that we see in there that really affect you, okay? So the first is that if they're canceling the benefit, so going back to the very first slide, if they're canceling the benefit like the cap on development charges, the credit, other kind of benefit, then they're gonna tell you in the assignment consent agreement. They're gonna tell you just one sentence, we're canceling all benefits, by the way. So if you didn't ask before, you will find out here, which is too late.
Right?
It happens.
Oh,
It
yeah.
happens. At this stage,
Always.
All
But
time.
Vankeys are good. I like Vankeys. Trudeau's good too.
at this stage, everything's firm. You basically you can't get out of the deal, right? So if you only find out now, it would be a big surprise to you. So that's why you should ask in advance. Some builders, they're nice. They'll tell you without you asking before. Okay, in the very beginning, they'll tell you that, by the way, we're canceling.
But what, at this stage, you cannot ask them for without cancel the benefit.
You cannot get out because you already confirmed the assignment sales.
Okay.
And if you're thinking about negotiating with the vendor, there's no.
Yeah, I tell
Almost.
you, at
No.
the very
But that's
beginning, is that possible?
Yeah, so at the very beginning, it's not the vendor that negotiate with, it's that if you know they're canceling, you can negotiate with the seller, the assignor, right? Because your assignment deal is not firm yet, then you can still negotiate.
I mean, from very beginning, sign the agreement with the builder. I mean, the purchase agreement with builder. So is that possible to ask a lawyer to talk with, you know?
Yeah, so if you
with
have
the
a
builder?
lawyer review condition, then within the review period, because the deal is not firm, right? We
Yeah.
can do anything. We'll ask the vendor, please
Have you
confirm
ever
me in
tried?
writing. Please confirm. Oh, we do that. We do that for every assignment
Every deal.
transaction
Yeah,
with
this is
a
an
condition.
additional point
Yeah.
lawyer's review
Yeah.
always.
Yeah, I know, I
No,
know.
but
I mean,
she's
so
talking
is that
about-
negotiable for cancel the benefit?
It's not negotiable.
Okay.
Original
But
purchase
you
is
can
talking
ask
about.
the seller
So
to
it's
compensate.
So
Cannot
actually,
get.
if
So
you-
the vendor, to the vendor is not negotiable,
Negotiable.
because
Builder
they're
is
gonna
always
say that if you want me to allow assignment, those are my terms, okay? You can try, but like, don't count on, they most, like 99% chance they'll say no, okay?
Depending on the
But as
market,
a-
right?
as a
So
sign-
right now, if it's hard to sell, so that's why
Yeah.
negotiable.
Yeah, but you can, cause they don't need you to assign, right? They'll say you can close yourself, they don't need you to assign. But sometimes, we have seen, some rare successful cases where you negotiate for the assignment admin fee because it's just too expensive when they charge you too high, okay? But not on those terms. And, so the point was, you cannot negotiate with the vendor, but you can negotiate with the assignor.
Yeah,
Also,
that's
Sarah
easy
sacrifice
way to
is
do
a
it
fee.
is
If
Yes.
they want to
just
sell the
don't
unit,
negotiate
and
with
they
the
eat up
vendor.
the cost.
Just keep it
Yeah.
simple.
So in this market, a lot of the assignors, they want to sell because they can't close. If they can't close, they are in default and potential litigation, right? So they're willing to negotiate with you and pay some share cost with you. Okay,
Lots
so
of them. Yeah.
but do it before your assignment is firm. Otherwise, the assignor is gonna say, "Why do I need to negotiate with you? It's already firm. You have to buy." Okay. Okay, so they're gonna tell you they're canceling the benefit in this consent if they're canceling it. And the second point is that going back to the HST rebate thing, they're gonna tell you here that regardless whether you're occupying the property or not, I'm not gonna help you apply for the HST new housing rebate. If you qualify, you can apply for it yourself. And some builder, when they're nice, they're gonna explain to you that this doesn't necessarily mean that you don't qualify, it's just we're not applying for you. Okay, so they're gonna tell you this is where you'll get this information.
That's true.
And
So a standee has to pay the 24,000 to
yes.
the vendor.
yes, upon final closing,
Then you
and
have to apply it
get
later.
it back yourself. Yes. Okay. And sometimes, so the second, staying on the second point, they use a template, right? So they'll just say this and they forget about this and they still give you the credit at the end. Yeah, we've seen cases like that. Okay, so the third point is that in almost all the cases, the vendor is gonna tell you that after the assignment, assignor will remain liable to us. So they just wanna make sure they're protected if the assignee defaults. under the agreement. They
Right.
have two people to go
There's
after.
no
Yeah.
people.
Yeah. But it's very rare because the signee, when they're buying it, is very close to the closing day, right? So they know very well their financial ability. So
Yeah.
we actually,
And then they already paid the upfront, right, like a
And
deposit.
also the profit
Yes.
to the seller, so it's lots of money.
yeah.
Yeah.
So we actually would never seen this happen. The signee always be able to close. Yeah. So the last one would be the vendor will tell you after the assignment, the signer and the signee are giving up their right to claim the delayed closing compensation from Terrion. So this was up to $7,500, but it's not necessarily that you're entitled to this. They're just telling you that you're giving up this right. Because when unavoidable delay happens, like strike or the pandemic, then the delay wouldn't qualify for this, right? So they're just telling you that you're giving up this right. So for this assignment agreement, it's normally like a couple pages. They can put in anything they want in there. They call it a consent, but it's more like their term. Like you agree, you sign, you agree to my terms, and I'll allow the assignment. If you don't agree, don't assign. Yeah.
So like if a spouse, they transfer the name,
Mm-hmm.
do they cancel the benefit part?
Okay, very good question. Because you sign the original agreement with the vendor a couple years back, right? And things can change over time. You may want to add a person, remove a person, or something. So for that kind of request, first ask the vendor's office or the sales team. Sometimes they have special program, like they can just add or delete a name, but sometimes they'll tell you the only way we allow change of name is through assignment. Yeah. So there's still like you can, it's a husband to wife, let's say, where you're adding a person, they're gonna still issue you this form. So the assignment agreement form. It's just that for you, because it's relative, right? It's simple for you. You're willing to take all this on, but you will still possible to lose something. Like this, the last thing, it's whenever you want to make any change to the agreement, they take that away. So whenever you want to do something to the agreement, the vendor almost always they will charge you something. Yeah.
Admin fees.
They'll
Yes.
win.
Yeah,
They'll win.
that's
Yeah.
always do. Yeah.
$500 minimum.
Gotta get
right?
something from it. Yeah.
So if your client asks you when they sign the agreement, original agreement with the vendor, like in the very beginning, tell them to make a best, estimate and guess of their future situation. You want to just try your best to avoid any change. Okay.
So if transfer to the relative, they may keep the benefit for you.
Yeah, they may.
If
Yeah,
you
they
allow
may.
to do amendment
Yes.
from the
Yeah,
purchase
because
agreement.
So I
said
actually
about
just
amendment
add my
to
daughter's
delete.
name.
Yeah. That's
Because I
Or
purchased
maybe you
the
transfer
condo
your
and
name
now
to your
I'm too
like a
close
kid,
and
something
then
like
add my
that.
daughter's
This
name.
will
Yeah,
give you
ask the
benefit.
vendor, maybe
Yeah,
they
But
gotta
they
charge
do
me
not
the
assign,
fee
Yeah,
they
so
do as
no matter-
amendment from the
Pretty much
purchase
guaranteed
agreement.
they'll charge you a fee
So
because
most
they're
likely
one
they
second, their
use
lawyer will be
assignment
doing the
because the
documents,
assignment
right?
keep the
So they'll
benefit
charge
for
you a
you.
document
I do.
amendment fee.
Oh, that's-
So you have to ask them, just tell them that I want to add my daughter, what's the procedure? They're gonna tell you what options you have. Yeah, it's at the vendor's option basically. Yes.
But at closing, when you're closing online, are you able to add her daughter's name
No.
at that time?
So for a resale property, we can just do directory title, okay? The seller doesn't have to agree. But for all pre-construction, you will have to get the vendor's consent. You can ask the lawyer to apply for you, and then we'll tell you what's the procedure and cost to the vendor. This really varies case by case. Some vendor, they're really nice, and they give you this right in the original agreement already. They make it very simple to you to add a relative, okay? As long as you make a declaration that this is my parents, this is my children, right? You tell them what's the relationship. But some vendor, they'll say, we don't care what's the relationship, we go through this. Yeah. And there's always some cost, okay? Even at the best case scenario, you have to pay like couple $100, like, or $1,000 for the no, couple $100 for the vendor's legal fee.
Yeah, but may I ask, now actually,
Well, you see,
when you
couple
look
hundred
at
Cancel
dollars
the
a month.
benefit.
most of
Cancel
the
the
vendor,
covers
they
and,
give you the
you know,
incentives to say,
it's
oh,
lots
it's
of
for
money.
free, assignment for free. So, but even though that, they're gonna still charge you the.
Yeah, the legal fee, they
The legal
always
fee,
charge you.
oh, okay.
For free, it's just their
It's
admin
just the
fee.
admin
And
fee,
then the
for free.
question,
don't charge,
for the same case here,
because
is there any beneficial for her to wait till it close and just add her daughter's name to the deed?
Normally we do that because the individual cannot be able to close the mortgage. It means that they don't have a power to have the money from the bank, or
But that's not the case here, the
not
case
read.
is to add her daughter, right?
If add is the same. If add, it means that either tax purposes or the mortgage, right? Otherwise, you can take the unit and then wait a year, so just retitle to whoever's name it is.
So sometimes our clients ask us, if I want to add my daughter, when should I ask the vendor? So the answer is as soon as you're sure. So if you're not sure, if you're waiting and see, don't do it because you can't reverse it, right? As soon as you're sure, I'm absolutely sure that I need to go on title with my daughter for whatever purpose, then do it as soon as possible because you need to apply for the mortgage under both people's name and the bank will want to see the amendment of adding name, right? You can just tell them that it's going to be under both name but without any documentation.
So also the question now, if I, for example, if I add my daughter's name and we are doing the mortgage and we have to do the how 50% or just I can
Okay,
put the
that's
99% on her name and
Sure,
she
you can do that.
she's
I
the
will
first home
leave.
buyer.
I leave these terms to you. I will not really say that she's only how much. She's only how much. Whatever percentage. My personal. What I do is I leave this to you.
Sounds so complicated,
Just
eh?
joint
Might as
tendency.
well then not.
It's joint tendency. You can own 1%, and she can own 99%.
And she
It
can
does not
use
matter.
her name to do
Yes.
the mortgage.
Yes.
She,
So
for her it's
as income qualification.
okay.
So in terms of how you go on title, the bank wouldn't care, the vendor wouldn't care, like the percentage. You just need to tell us to confirm in writing before closing how you're taking title. You can choose joint tenancy, you can choose 99%, 1% if your daughter is first-time home buyer, okay, for her to take a
For her
multiple
it's
benefit.
easier to get a mortgage. I think.
And also, as a first-time home buyer, you save tax. And also, to remove you in later date, you don't have to pay much on the land
So
transfer.
it's better
You
to
only
add
own
her
1%,
name.
so it's very little
So
for
if
to
one
remove
person
your
and
name.
kids are
So
like
how
a
about the
first time
parents be
buyer,
the guarantor?
the parents are
Guarantors
not.
still have
So
to
do they
own
still
at least
consider
1%.
like a
You can
first time
buyer?
remove your name
Yeah,
whenever
so
you
the
want.
children will
Yeah.
still qualify.
Even if
So
it's two
if-
names on the phone.
Yeah, so two name, A and B going on title. If A is not first time home buyer, B is, and B has 99% ownership, then B, you can get the 99% of the first time home buyer rebate, okay? The person that qualifies will get his or her own portion.
But that does not affect the mortgage because if let's say they
No,
wanna go
it
on
wouldn't
mortgage
affect-
50-50, but
Yeah.
they, okay.
As
Yeah,
long
okay.
as you have 1%, so you have to still go
Okay.
on
As your
title.
name
But
is
yeah,
on
but some
title.
always,
Yes.
Yeah.
I will avoid that. It's
I will,
fine.
yeah.
It's
That's
not big
good.
deal.
That's good to know.
Don't put only your daughter. Maybe she's gonna sell.
Yeah, so to get
At
a
least
mortgage
you're
at both
1%.
your name, you
Yeah.
have to both go on title.
Mm.
Put the both name safer.
That's smart, yes.
Alright, okay, so closing. We have a lot of clients that are still overseas at the time of closing, especially when you don't know when it's gonna close. So you all know that for resale transactions, you can do remote closing these days, right? As long as we can verify their identity. But for pre-construction, it's a little bit more complicated. And because for occupancy closing, the vendor would normally require the post-dated checks from the purchaser. Normally they'll ask for 12 or more, 12, 18, 20. We have seen all of that. And then in that case, the purchaser will have to mail those checks to us in advance, okay? So as long as you arrange all of this in advance, we'll be able to close remotely. And sometimes some vendors these days, they will accept pre-authorized payment. So as long as the purchaser has a bank account here, then we'll just provide the void check and they can enroll in the pre-authorized payment for the occupancy fee. And in the case that the purchaser doesn't have anything here, we have cases like that where they don't even, they never been to Canada actually. They bought a pre-construction but they never came here before. Then in that case, the vendor would ask you to pay for a 12 months occupancy fee at once during occupancy. It's a larger amount, but that's the only way you can do it then. Okay, so occupancy fee. And then they'll also, sometimes they ask for the mortgage approval for occupancy closing. You can do that completely remotely. You can get one, contact the mortgage specialist and get that in PDF format. And then sometimes in occupancy closing, they ask you to pay for additional deposit. So the same, you can do it in advance as long as we get the check like at least a week in advance for you to clear, because normally law firms we only take bank draft and wire, right? Then we can help you with that, but it's a small amount and we have to get it in advance. Okay. And occupancy closing, the vendor will always ask you to provide insurance, and you can also get that online now. You can just contact the insurance agent and they'll issue a PDF format for you, okay? So occupancy closing, you can absolutely do it remotely. It's just you need to prepare in advance, okay? And final closing too, okay? So final closing for a pre-construction, it's not very much different from a resale. The only big difference is the HST rebate form. If you are the original purchaser and you're occupying the property, then you are making the declaration that you qualify for the HST new housing rebate, right? And in your closing documents, you will need to sign the CRA forms. And for those forms, 90% chance the vendor will say we need original, because they need to send to the CRA for application. So for this form, we need to arrange in advance to have you sign. You have to courier to us, oversee to our law firm, so we can submit in time for closing. So just need time in advance to prepare, then you can close remotely, okay? Okay, so a little bit about NRST. So we get a lot of questions when you're purchasing a pre-construction, like when do I need to pay for this? When do I need to get the status? So the only time that we actually check for NRST payment is upon final closing, okay? For occupancy closing, we don't require you to have a status. You don't pay for the NRST non-resident speculation tax at occupancy closing. It's only on final closing day. So that's the day the title is transferred. That's the day that we check your PR card or Canadian passport to confirm that if you need to pay for the NRST. Okay, and if you need to pay, that's the day you pay for it.
So right
But
now,
now you
can. Now you
cannot.
can.
No,
So
no
now,
RST.
now you can. So now in the because the vendor these days, they have a responsibility to check when you sign the agreement. So they have revised their original agreement to include a declaration. As the buyer, you have to declare that I qualify, I can buy. You have to provide ID to them as well.
Okay.
Yeah, they're
And
very
it's
strict these days.
35% now, right? Not the 25%. How much? The
25%.
25%.
Yeah.
Before, it was 25.
Alright, okay, so this is our last point, I think, regarding extension, okay? Because some clients, some buyers, they're not familiar with the closing procedure for pre-construction, and we have heard a lot of questions about occupancy. They're gonna ask us, can I not do occupancy because they have to pay the occupancy fee, right? It's very expensive these days because of the prime interest rate. The answer is no. You have to do the occupancy within the timeline set by the vendor. I know that because of the pandemic and strike, the vendor would extend the closing day like again and again and again, but it's a vendor's right under Tarion. The buyer doesn't have this right. You have to close on the scheduled closing date, and you have to start paying for the occupancy fee starting from that day. And if you can't close on that day, if your client can't close on that day, then you have to tell us and we'll apply for extension for you. So for occupancy, there's normally more leniency on occupancy extension, but they still charge you, okay? Sometimes they can wait for like a few days, but if you extend for too long, they'll still charge you. And you still need to pay for occupancy fee starting from the original scheduled occupancy date. So there's no way you can save cost by having an extension, okay? So this is the occupancy day. And for final closing, we had a lot of extension requests from the clients in the past half a year because of the change in mortgage and unexpected time of closing, okay? And if you need an extension, you have to let us know and we'll try to apply for extension for you. Normally, the vendor would approve the first extension, but they're very, very expensive, okay? Normally, they charge you the interest based on 15 to 20% annual interest rate on the unpaid balance of the purchase price, plus their penalty, interest, admin fee, legal fee, like all those costs, okay? So it's very expensive, and in addition to that, it's not flexible, okay? So for a resale, there's a lot more room to negotiate, but for pre-construction, sometimes they don't even approve your extension date. They'll tell you, we only accept extension requests to this day or this day, pick one, okay? And they will tell you that if you don't close by this day, you forfeit your deposit, the deal is off, we'll release the property. So it's a lot more strict than the resale, okay? So make sure it's your client start consulting a mortgage specialist at least from the occupancy time. So every client, when they come in for signing for occupancy closing, they ask me when is final closing, okay? The answer is always we have to wait for the vendor's notification.
So most cases, according to your experiences, how long between the occupancy closing to final closing?
Okay, so we have certification where they set it on the same day. So they first send an occupancy notice and then they notify us, oh, by the way, it's gonna be on the same day. So basically that means you skip occupancy date, okay? And if, except from that case, we mostly see it's like 3 to 6 months, but we have seen cases where it's over 1 year too.
Over 1 year.
Yeah, so you have to wait for their notification. Yeah, they'll notify you, and they wouldn't give you too much notice in advance. What we see is that they mostly notify you 3 weeks before final closing. They'll tell you, oh, by the way, 3 weeks later we're gonna do final closing. This is the date you have to close on this date.
Okay.
That's why you can't start preparing for mortgage when you get the notice. You have to do it in advance.
So we have to do after we do the occupancy, we start to apply for
Yeah,
the
that's my
mortgage.
suggestion when my clients come in to sign. I'll ask them, are you in talk with a mortgage specialist?
Yeah.
You need to get ready and make sure you can get a mortgage pending the final closing date. So when you get the date, just fill in the date to finalize
Okay.
this. Yeah.
Okay.
All right. Okay. I think that's all the content I'm sharing with you. So hopefully it's helpful. Assignment is
It's very helpful.
it's a complicated procedure, and if you have any specific questions, feel free to let me know. Okay.
Thank you
Okay,
both.
now back to